Did you know that dollar has touched the rupee 96 mark already? Do you know that it is worrisome? But at the same time, more worrisome is the fact that the analysts and researchers are saying that it might easily cross the rupee 100 mark as well. You might be thinking that is going to be devastating. Yes, might be. But the question is, what is causing it? And most importantly, in a country which has managed floating rate, why RBI is not able to manage it? Where has the management gone to and what is going to happen next? Hello everyone, welcome to Vajiram and Ravi's Flash News. My name is Shubhangi Singh. In today's session, we are going to understand, will dollar touch the rupee 100 mark? And if it does, what is causing it and what might come in it? Let us begin with understanding that what exactly we are looking at. So as of now, the speculation has straight up gone beyond 95, 96 and it is about, will dollar cross the rupee 100 mark? Now when we are looking at the given situation, we clearly get to see, even in this given diagram, you can clearly see that how in especially just last 1.5 years, we are seeing multiple historic lows for rupee. The situation, similar situation was last seen in 2013, but as of now, we are in a situation where there is another historic low of 96 rupees per dollar has been seen. Now, first of all, we need to understand here that what exactly it means and why it is a problem. Because a lot of you might not be able to understand why are we putting this as a problem. So let us break that down. So when we are talking about $1 is equal to 100 rupees, it means that you need total 100 rupees to buy $1 US. Correct? Previously, let's just say when it was 90, that means you needed 90 rupees to buy $1. So it shows that the value of rupee is decreasing because you need more and more rupee to buy $1. And that also shows that our currency globally can buy less. So the value of rupee is going down, that is depreciation, and we are being weakened in terms of global purchasing power as well. If I have to put it simply, let us look at this very example, where if I am saying we are buying products worth $900 and the rate here is 50 rupees per $1. The total amount that we have to pay, what will it be? This is the total amount that we have to pay, right? But in a situation when we have to pay the same amount in dollars, but the value of rupee has depreciated, look at the amount that we would have to pay. Isn't almost the double of this amount? And this is what we are having the problem with, that we have to pay more to buy the same things. And when we are looking at our economy, we get to see that we need a lot of dollar. We need a lot of dollar to buy crude oil, a lot of dollar to buy electronics, fertilizers, defense imports, and so much more. So that means whatever we are going to buy, we have to pay more and more and more for that. This is the situation which makes rupee's depreciation a big problem for economy, that things will get very, very expensive. Now comes the question that why exactly is this happening? So for this, we have to look into the factors which are resulting in the free fall of rupee that is present in front of us. Before that, let us understand a very simple concept. The value of a currency in exchange rate is determined by demand and supply. So when we are looking at rupee and dollar, in this situation, if the demand for dollar increases, automatically the value for rupee will decrease. If the supply for rupee increases, then also the value of rupee will decrease. Now, in this situation, when we are understanding what are the factors, this concept will be very handy. How? If you look at the first thing, crude oil price shock is present because of Iran war situation. Russia-Ukraine war brought in crude oil shock, but it was not as intense as what we are seeing presently. As we know, India is dependent 85% in terms of crude oil on import. So, in this context, we need more dollars because crude oil has got expensive. We need more dollars to buy the same amount of oil. And furthermore, because rupee is depreciating, we have to pay more in rupees as well. Now, because the demand of dollar is increasing, the value of rupee is decreasing, and that is why depreciation is happening. Second thing, we are seeing immense amount of FII outflow. That means the foreign capital that was invested in the financial assets, they are going away from India. Why they are going away from India? Because of the uncertainty. They have made good profits. Now they don't want to be in the chaos which is present across the globe, and they are moving towards safe assets such as US dollar, such as gold, etc. Now, when people are taking out money, what does that mean? They want their dollar back. If they want their dollar back, that means the demand for dollar is increasing again. So, demand for dollar increasing, rupee weakening. Understood? Now, there are other factors as well which are playing a huge role. Third factor that comes in here is the strong dollar itself. Given the global chaos, dollar is a asset which not only is stable, but at the same time, if you look towards US economy, it offers high interest rates which further strengthens the dollar index. So, when dollar will be strengthening, emerging market automatically will see their currencies weakening. So, this is not something that is happening exclusively for India, but certain factors are hastening the process, fastening the process that we are seeing in front of us. And third factor that we look for India, which is further leading to depreciation, is that our trade deficit is widening at a faster pace. What we paid previously in dollars, now it is more, and furthermore, this requirement of more dollars because India imports so much is leading to further depreciation. We need more and more dollar, and whatever dollars we had, it is seeing outflow. So, in this situation, all it leads to culmination where rupee is seeing an intense fall. That is why historic lows are so frequent, especially if we look at the last 3 months for the rupee dollar comparison. I hope we are clear about two facts, that what exactly is the worry point if rupee is falling, and second, why rupee is falling. Now that we have a fair idea, this is where I would also want to bring another important factor, because we started our conversation, will dollar touch the rupee 100 mark? And for that we also need to look into another important factor, that why it is seeming so disastrous. Because we are very close to it. We are seeing that all the factors which are present, they are still going on. So, they might be controlled, we will be discussing what can control it, but let us also look into that why this mark seems like a danger sign. First example I had already given you when I was explaining that why it is a problem. We took the example of rupee 50 rupees per dollar and 100 rupees per dollar. That means we are going to pay more, and this payment that we are making, it is not because things are getting expensive in the economy, our own economy, it is because we are importing all of this, that is why imported inflation. Second, this will lead to extreme corporate stress. The margins will start declining, they would get into layoff mode, and it will also affect the economy progress. Now, third thing comes, which is more psychological. It is just like gold crossing the 1 lakh mark, gold crossing the 1.5 lakh mark, silver crossing the 2 lakh mark. This is where we get to see that certain big marks are made which are seen as a barrier, that a final threshold that will not be crossed. And once they are seen as a big failure. Now, psychological threshold being crossed is one thing. The second is what this threshold being crossed will create as an impact. First impact will be on citizens, of course, low morale would be understood, but at the same time, it fuels the sentiment which are present across stock markets, let's use a broader term, financial market, other institutions as well. And it also impacts India's credibility to manage their own BOP. So this is where the problem is with this mark. This mark might be manageable from India's end, but it will create such a ruckus, such a chaos that India would be finding it very difficult to find ground again. Now we have established this, why this mark is dangerous, why it seems disastrous. Now let us move to understand another very important factor which has been pointed out by researchers and analysts, that forward markets are already further contributing to what? To the free fall that we are seeing, and this contribution is not positive. What are forward markets? Forward markets are basically where forward is traded. What is forward? Let us understand that. When we are talking about, it is a derivative contract, and now this contract is signed between two parties which decide to buy or sell on a predetermined price on a very given date. Now what is happening in forward markets, that there is already prediction that the dollar will be crossing the 100 mark. So what are importers doing? They are buying future dollars, which is leading to high speculative trading as well. And this speculative trading is leading to more demand for dollars, and then it is adding another round of pressure on rupee. That is why RBI had to finalize their strategy on forward exposure, and as of now RBI's forward book contract has crossed $100 billion. So as of now India is looking at a large scale intervention because they know that forward market is already amplifying the situation, the panic and also the dollar demand. So this also needs to be controlled. There has been multiple steps that have been taken by RBI regard to forward contracts, which we have previously discussed as well. But at the same time, we need to get into another important discussion here, that what we can do to control this fall of rupee. So what RBI can do and what is happening. So when we are talking about the demand for dollar is increasing, and that is why rupee is weakening. So one option is, if we want to make supply equivalent to the demand for dollar, that will stabilize rupee. What we can do? We can sell our foreign exchange which is present, foreign currencies which is present in our reserves. So we increase the dollar supply and we are to reduce the panic. And that is something that RBI has done. RBI has already spent a lot from their forex reserves, somewhere between $70 billion to stabilize the market. But this will also lead to depletion of reserves. Another option that RBI has once exercised is swap operation, dollar swap operation. This will bring dollars in our economy and it will help in stabilizing markets. But this is something that needs to be finalized with in terms of auctions. Other than that, the major step that RBI can think about here is higher rates, higher interest rates, so that the foreign capital flight that is happening, that does not happen. But at the same time, what will happen if the interest rates will rise? They will hurt the growth of the economy. How? If the interest rates rise, the loans will become more expensive, the credit will become more expensive. If credit and liquidity diminishes in the economy, it can hurt the growth that is taking place. And this will also lead to slower investments. If people know that the interest rates are higher, then why to invest in projects which might be unpredictable? Let us invest where? Let us invest in deposit. Let us get the interest rate there. And this is where RBI is yet to bring any change in interest rates. Other things that can facilitate are definitely NRI deposits, promotion of exports, which we are focusing on, and then definitely easing FDI norms. Something that can ensure that foreign capital comes and stays. FII is highly mobile, but FDI is not so much. So the need of the time is not just to ensure dollars supply, but also ensure that there is stability to it. What are your thoughts on this? Let me know in the comment section. What do you think that RBI should look into and address? Let me know in the comment section. That was all from my side. I will be leaving you here with a prelims practice question. So let me know the answer to that as well. Let me know the answer to this. That was all. Thank you so much.